In today's video, I'm going to build what I think could possibly be the perfect 5 dividend ETF portfolio that's not only going to offer dividend investors a ton of upside and a ton of growth long term, but also this portfolio is going to pay investors a substantial amount of income from day one. Now, the way I came up with this portfolio is the accumulation of around 7 or 8 years of full-time dividend investing as of right now for myself, and all the things I've learned over the years on what to do and what not to do for building a portfolio that truly offers the best of both worlds when I'm talking about growth and income potential also. So if you want to see which 5 dividend paying ETFs are going to be included in this portfolio, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first position in this 5 ETF portfolio that's going to offer dividend investors a ton of growth, a ton of upside, but also is going to offer a ton of income from day one. The number one position is going to be SCHD, or the Schwab US Dividend Equity ETF. And this is because SCHD, although it only offers around a 3.39% forward yield, this ETF has had some massive upside historically, growing an ETF price very quickly over time. But on top of that, this ETF has some serious dividend growth, paying dividend investors around 11% more cash flow year after year after year. Now also, SCHD has a high quality basket of holdings. Around 100 different stocks are going to be inside of this ETF, and we've talked about SCHD on the channel a lot over the years. I'm such a fan of SCHD personally that this is one of the top 5 positions in my overall 7-figure portfolio, and I'm buying SCHD almost every single day because the fact that this ETF just keeps moving up in price over time, and also, like I mentioned earlier, it pays investors, at least historically it's paid investors, more and more in dividend income year after year after year. So without a doubt, if I was to build out a 5 ETF portfolio as of right now in late 2024 to hold on to for a long time, and if I was solving for growth potential but also income from day one, I would definitely buy a large portion of SCHD, which honestly is what I'm doing as of right now. The next ETF that I would include in this 5 ETF portfolio would have got to be DIVO, or the abbvie CWP Enhanced Dividend Income ETF. Now, I'm a huge fan of DIVO, particularly because DIVO buys into a small basket of holdings that wouldn't necessarily on their own offer a ton of dividend income, but because DIVO does have that cover call overlay, because the management implements that, this ETF, which would normally probably yield around 2% more or less, yields around 4.5% starting. So even though a lot of the stocks within DIVO aren't necessarily the highest yielding, this ETF, because of that cover call overlay, does yield a lot more than investors would get otherwise. And not to mention, DIVO over time historically has been going up and up in price, so there is a ton of upside potential, at least there has been over the past several years. And that's why definitely in the talks for trying to build a portfolio with sort of the best of both worlds, that's at least my investing strategy. I'm not necessarily an income investor. I'm not necessarily only a dividend growth investor. I like to have things in my portfolio that are going to grow over time, but also, even though I'm only 31 years old, I want to get paid dividend income, and I want to get it paid a lot sooner than maybe some other investors out there. Now, as you can see also, DIVO does have some dividend growth, and even if it's a little bit on the slower side, this ETF has been paying a monthly dividend, which has been higher and higher over the past several months. So because of the diversification and because of the cover call overlay and the initial yield that is much higher than a lot of other ETFs that have the holdings that DIVO holds on to, DIVO would have to be included if I were, of course, to build a 5 ETF portfolio solving for growth and income. Now we're going to start to get into the higher yielding space. I would definitely include one of my favorite positions and one of my longest holding positions as of right now, JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF. A lot of you guys know about JEPQ. I'm sure a lot of you guys do hold onto this one, and comment down below if JEPQ is currently in your portfolio, just out of curiosity. But JEPQ, what is there really to say? This ETF is one of the highest quality cover call style ETFs out there and has the performance to back up that claim. JEPQ has been paying nice sized dividends every single month since inception, which you can see right here. Some months are going to be higher, some months are going to be lower, depending on things like volatility and other things. But over time, JEPQ has not only been offering investors anywhere from 8% to 12% yield per year, which is massive, but also on top of that, JEPQ has been moving up in price a lot. And I'm sure if you guys hold on to this one, you have really enjoyed riding this one up into the mid 50s and beyond. Now, even though JEPQ is obviously more of an income-focused ETF, there's not necessarily going to be as much upside with this one as some other ETFs out there. JEPQ, like I mentioned earlier, along with the other ones, sort of does the best of both worlds, offering investors a ton of yield, again to the tune of around 9%, but on top of that, this ETF has grown and grown and grown, at least since I've held on to it. Now, there's of course a ton of other covered call style ETFs out there, but if you stack them all up next to each other, which I've done in videos before, definitely check those out. JEPQ for the most part comes out ahead a lot of times, which is why a lot of people sort of consider JEPQ royalty if you are talking about the conversation around covered call style ETFs. And speaking of covered call option style ETFs that focus on income, one of my other favorites, this one would also have to be included, SPYI, or the NEOS S&P 500 High Income ETF. This is one of my new favorite positions, and I've been buying this ETF like crazy over the last year or so. Now, SPYI tracks the S&P 500 for the most part, and sells calls and buys calls also. SPYI has offered investors around 11 or 12% yield since inception, and one thing I love about this one is that the distributions have been very steady, anywhere from around 45 to 55 cents as of recently, which again, this is probably an anomaly because of that massive volatility spike we saw, but still, even 50 cents more or less, 48 cents more or less, is going to give investors like you and I around 11 or so % per year in yield. Not to mention SPYI basically trades sideways or even up a little bit, at least historically. Again, this is a relatively newer ETF, so we're going to have to see over time how it trades, but this has been one of my favorite additives of the portfolio over the last year. You guys at this point probably hear me talk about this one all the time, and this ETF single-handedly has really helped me raise my dividend income moving forward because for the fact that every single share that you buy, which costs, let's say, around $50 or so, you're basically theoretically adding around 50-cent raise of dividend income or distributions to your overall forward-looking income strategy moving forward. Now, like I said, this is still more of an income-focused ETF. It even says high income ETF in the name, so you're not necessarily going to get massive growth or upside with this one. Although, like I said, even if it trades sideways or moves up a little bit over time, an 11.7% yield is going to do the trick and going to give investors out there that are looking for growth and or also income just what they're looking for the most part. Now, the last ETF that I would include in this 5 ETF portfolio, again, if we were solving for massive growth, massive upside, but also if we were looking for income a lot sooner than maybe some other investors out there, I would personally include the Simplified Volatility Premium ETF, SVOL, which basically shorts the volatility index. So as long as there's not any crazy volatility spikes, for the most part, this ETF will do pretty well, at least it has historically. Not to mention, as of recently, when volatility did spike, SVOL recovered pretty quickly because of course this ETF strategy, which I've talked about on videos before. Definitely check them out. But the reason I would add SVOL in this portfolio of 5 dividend-paying ETFs is because this ETF, although a little bit more risky in my opinion, it offers around a 16% yield, which is going to get your dividend income up substantially compared to other ETFs across the markets. Now, SVOL pays more or less 30 cents every single month, at least it has since inception for the most part. Not to mention SVOL, although there is a tad bit of NAV decay, this ETF over time has more or less traded sideways, or even as of recently up a little bit. So even if SVOL, let's say worst case scenario, decays at a 1%, 2%, 3% every single year and pays us around 16 or 17% yield, I don't know about you guys, I can't speak for everyone, but I'd be more than happy with a 12 to 14% return for an investment that's relatively low beta and sort of just stays out of the way. Now again, for those investors out there that are looking for some massive growth potential, that are looking for some home runs, maybe SVOL or some of these other ETFs aren't perfect for you, but for those investors out there that are looking for some high quality income potential, but along with that some growth, those are the 5 different ETFs I would include in a portfolio if you were solving for both those. So there we have it. Those are 5 different dividend paying ETFs that either offer some massive upside, some growth potential of course, and or massive income potential also from day one. Now, as you can see right here throughout my long-term portfolio, I basically have a nice mix of different stocks and ETFs that offer both of the things that we talked about in today's video. My strategy, my objective for my portfolio for the most part is to buy into different stocks or ETFs that pay a nice decent dividend, have some growth potential, but also offer dividend growth. And if not, I want dividend stocks and ETFs that are going to offer me a lot of dividend income from day one. But now that we went through the 5 different ETFs that I personally would include in a portfolio, today if I was solving for growth and income potential ASAP, I want to hear from you guys down below. What is your favorite number 1 stock or ETF as of right now that offers not only growth but also income potential? Drop the ticker symbol in my comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.